Pakistan's central bank has been on a roll. It has reduced the benchmark interest rate in every meeting since June, including a record cut at its latest meeting in November.
शरह सूद में 2.25% तक कमी। स्टेट बैंक ने शरह सूद में 1% कमी कर दी है।
It is also expected to cut the interest rate further in its upcoming meeting on December 16. While all these decisions have been hailed by industrialists, what effect do falling interest rates really have on the real economy? But first, a quick intro on what the real economy is for those who don't know. It's the part of the economy that deals with goods and services rather than banks and stock markets. When interest rates fall, they affect the industries, the drivers of the real economy in multiple ways. Number one, they make borrowing less expensive. This makes it easier for companies to take out loans and invest in upgradation and expansion, increasing profits and creating more jobs. Number two, for companies that have outstanding loans, they reduce the cost of doing business since they now have to pay back a lesser amount, which has a positive effect on the growth of the real economy. The industries most likely to benefit from falling rates are automotives, cement, steel, and textiles. Number three, cheaper borrowing rates also make it more likely for people to take out loans for products such as homes, home appliances, and cars, and just generally spending more, driving consumption and stimulating the real economy. But while Pakistan's central bank has reduced the interest rate by 7 percentage points since June, the effect on the real economy has not been as significant as might have been expected. Cement sales have only picked up in the last 2 months, large-scale manufacturing has actually declined in the first quarter of the fiscal year, and while auto sales are up, they're nowhere close to where they were years ago. So why are falling interest rates not having the intended effect quickly? The answer has a lot to do with Pakistan's economic situation, which has only started to improve in recent months. Its inflation, which reached a record high last year, has eroded people's purchasing power, leading to reduced demand. Moreover, the country also raised its electricity prices sharply over the last year in an attempt to reduce its circular debt, making it the biggest expense for many households and raising the cost of production, also resulting in lower demand. So while falling interest rates do benefit the real economy, in Pakistan they will continue to have a limited effect as long as people's purchasing power remains low and the cost of production remains high.